Good morning, folks. Frank Zarella here, Zor Capital. Do a quick video in regards to a certain scan that works pretty well when the market is down multiple days in a row, or just works pretty well in general. And the scan is very simple, is down 3 days in a row and up today. So it's more like it's like a mean reversion strategy where you're looking for stocks that are pulling back, but you're waiting for the update to get involved. And the reason why you wait for the update to get involved is because 3 days can turn into 4 days, 4 days can turn into 5 days, and 5 days can turn into 6 days, and so on and so on. So you don't want to try to pick the absolute bottom. You want to pretty much just wait for the turn. It's that simple. So you're looking for a change of pattern. This is something that I picked up. I think I was reading maybe a Van Tharp book or Larry Connor's mean reversion strategy with the RSI2. I think I picked it up from there or somewhere. And either way, as I started to study the best performing stocks on a weekly basis, I started to notice that a lot of moves start with that one pattern. Now, when the market is down multiple days in a row, this is by far the best pattern there is, and you'll see that most stocks, when the market is oversold, will start from this one particular pattern. So either way, the pattern is. Just give me a second here so I can show you the scan. The pattern is down 3 days in a row. Here, just make this one easy. C is lower than C1, C1 is lower than C2, and C2 is lower than C3. Okay, that just means today is lower than yesterday, yesterday is lower than the day before, and 2 days ago is lower than 3 days before, whatever the case may be. This is going to spit out the stocks that are down 3 days or more. Okay, you add another filter, which is up today. It can be changed from open, it's up. It can be up based on today's close is higher than yesterday's close. That's the additional filter to just look at stocks that are up after this one particular pattern here, okay? So I'm going to show you the stocks that I've taken this year with this pattern. Here's my list. Tandem, which was taken 124, which is right over here. So the stock was down 1, 2, 3, and then here I took the stock here 124 long 48.34 down 3 days in a row through yesterday's highs. Okay, ideally the way you want this pattern to work is for it to break this high and then for it to continue to go higher without breaking the previous day low. Okay, an example of that is when it did it right over here when the stock was down 1, 2, 3 days in a row. Here's an up day. Here it was a down day or a flattish day, up day and up day. So you get involved with the stock, let's say hypothetically right over here. I usually put my stop either at the low of the day or the lowest red candle, which in this case would have been right over here. So your stop, you get long right over here, let's say at the close 32.11. Your stop is right over here at 29.43. Then the stock moves higher. Okay, your stop, once you get this candle, you can raise your stop to this low, which is 29.99. The following day the stock moves higher. I'm always a believer that you got to sell some on the way up, so you can sell some on the way up, but at a minimum at the close of this day you're raising your stop to 32.34. The next day the stock doesn't break a new high, it's okay, but now you're raising your stop from 32.44 to roughly 33.38. The following day the stock continues to move higher. You can take some off on the way up, but again at a minimum now you're raising your stop to 35.31. The next day the stock moves higher. Again at a minimum, you either take some off or you don't, but at a minimum your stop now goes up to 36.89. The following day the stock breaks to the previous day low, you're out of the trade. Okay, let's see if we can find another one. STNE, similar situation. This one did not work out. Stock was down 4 days in a row here. I got long here at 2150, and then it broke. So my stop was here at 2067. Stock goes here the following day. Stop goes to 2111. Now this stock didn't make a huge move, or it closed pretty much flat. You could have kept your stop right over here, okay? Because it's still doing nothing at all. But usually when you're buying these patterns, you want the stock to move up immediately. So even here, the stock pretty much went flattish for 1, 2, 3, 4 days. So this is not the type of this is not the way you want the stock to work out when you're buying this pattern. Okay. ZS, you know, bought the stock right over here, right over here, right over here. It did not make a move. A lot of it was probably because they were coming out with their numbers. Usually it works best when you have this type of pattern, when the stock is going down. Like for example, you have here 1, 2, 3 days in a row. Now this is not an easy pattern to buy because the stock looks like it's in a free fall. However, you can, you know, buy the stock here. You could have cheated here because the stock was up. It broke this pattern of lower highs and lower lows, and then you can just buy it here. Your stop goes right over here, which is far away, which is 30.72. But once the stock closes here, your stop now goes to 32.50. The next day, the stock inches up again. Your stop goes up to 32.54. Not much of a change. Right over here, your stop goes to 33.55. Right over here, your stop goes to 33.91, and then it's a stair-step fashion. Okay, and had you used that type of stair-step stop pattern, you would have been stopped out right over here on this day at roughly 38.30. That's when the stock finally broke the previous day high. This is ideally how this thing is supposed to work. It did it again here. 1, 2, 3, up day. And then it kept you in the trade for 1, 2, 3, 4, 5 days. You were out on the 5th day right over here at this low. Okay, let's just continue here. Rita, similar situation, down 3 days in a row, up. I got long the stock right over here, 130 at 76.19, down 3 days in a row, up today. Stock went up to 80. So again, I'm a big believer in selling on the way up, and then try to, you know, reducing your risk by selling some on the way up and then raising that stop as quickly as possible. Again, this is more like a flag pattern, so it wasn't as explosive as an oversold situation. Like maybe here where it was down multiple days in a row. Here's your up day, and it kept you in the trade, and it had a nice move from roughly, call it 50.51 to 56.75 in a matter of 5 days without breaking the previous day low. This was a very nice move, obviously, in hindsight, but you would have been stopped out right over here at 76.46. Okay. Here's BKD. This was at the beginning of the year. You know, the market was still pretty much oversold in general, so this pattern worked out really, really well. But let's just show you here. This is at the end of December. This did not work. This is, for again, there are two ways you can play this. You can either wait until the stock breaks the previous day high, or if it's a green day like this, you know, and you like the pattern and you like the situation, you can cheat and buy some, although this is a pattern of lower highs, lower highs, lower highs, lower highs, and lower lows, lower lows. Here in this little candle, it broke one side of that equation, which is it did not make a lower low. You can cheat here. And I normally cheat when this happens, but not with full size, because it hasn't broken the previous day high. Okay, but it broke one side of the pattern, which is it did not form a brand new low. But if you buy here and your stop is right over here, then you have to take it off. And one issue that you might come across when you're buying this pattern is you might say, hey, the stock is oversold. Okay, and I only bought a little, so I'm going to wait and buy a little bit more, and then something like this is going to happen. Okay, so here Here the pattern happened again where you could cheat. Okay, so you could if you had to buy 1,000 shares, you buy 250 here, and then over here when it finally goes and breaks the actual pattern of lower highs and lower lows by breaking this high, then you go all in. Okay, and then you do the same thing. You stop here in this situation. Since this low is lower than this low, than the last red candle low, your stop is right over here, which is 608, and then it goes up to roughly 631, and then it goes up to 664. You would have been stopped out right over here. Okay, I took this trade on the second pattern here where it was down 1, 2, 3 days in a row up today. So here long 684 down 3 days in a row and up 4% today. This one worked out perfectly. A lot had to do with the market, but here's a stock that's extremely oversold underneath the 200-day moving average, everything across the board. At the bottom of whatever it is, near 52-week low. This is what the type of patterns they tell you to stay away from. But here's what happened. Long at 684, the stop goes right over here, which is the lowest day on the red candle pattern, which is roughly $6.41, call it 640. The next day when I get long the stock, it goes up to as high as 688. It broke the pattern of lower highs and lower lows. Stock goes up to 646. Then the next day it continues to move higher. Stock goes up, the stop goes up to 680. And as you can see here, what you're doing is it's just a stair. You just pretty much raising that stop in stair-step fashion every step of the way. Okay, at the same time, you can start selling some on the way up. If you follow this stair-step fashion, you have the patience to hold on to this stock just like this. You would have been stopped out right over here once it broke to this low, which is 805 on this day right over here, which is not a bad 684 to 805, $8, which is not bad at all. MRIN, again, this is, again, I believe that it works best when the stock is, I wouldn't say in a free fall, but when the down 3 days in a row, it's actually down, you know, some percentage wise is down a decent amount or points. Here the same thing, 1, 2, 3 days in a row. I got long 114 down 3 days in a row up through yesterday's highs. 1, 2, 3, 4. This would have stopped you out right over here. This is a decent return from here to this high. It was roughly 22%. So this gives you so on the up days it gave you an opportunity to get out at a decent return. And again, I'm a big believer in selling some on the way up. MRIN, ADIL, similar situation, down 1, 2, 3 days in a row. Long 541 down 3 days in a row, up today. Okay, so here when it's down 3 days in a row, your stop, since the low on the up day is lower than this one, than the down candle, your stop's going to go at this low. And then you start raising, you would have been out right over here had you just used that simple stop, that stair-step stop order. And again, you want to sell some on the way up, because from here to here, from 541 to roughly 675, that was roughly 30%. That's a big move. Okay, so that's just the way it works. Sometimes in a situation like this happens. Long 421 down 1, 2, 3, 4 days in a row, inside day, up today through the high. Okay, it goes up, and then this happened, and I got stopped out right over here, and then the stock continues to move higher. This is going to happen. I think this is a gap down day. I think whatever it was, it happened. ATSG down 4 days in a row. Up here, I guess this is when I got long. I sold some on the way up. It's a slow moving stock, but you would have been stopped out the next day, and then it would have been up again. Again, I believe that this works best when you actually have a stock that Not, not that it went sideways 3 days in a row, it was pretty much flattish, that's great. But this is when it works best, when it's down. This one went down from 70 down to roughly $61 a share. Here, it's down 1, 2, 3, 4, 5 days in a row. You could have cheated here on this inside day. I went long right over here on 213. Inside day through the high, but you could have bought some here once it broke this pattern. It broke the pattern here, but the stock closed red. You could have bought the stock here with a stop at 62.33, and then you could have sold some on the way up and hit a high of roughly 70, 78. You would have been out on this candle right over here when it broke the previous day low. Now, all right, so this is, let me just tell you, so here, so now that you get a feel for the way it works, let's just go through this one again. This one here, CGC down 1, 2, 3, 4, 5 days in a row. 226 long at 44.80, down 5 days in a row, up today through the high. Okay, this is when it broke the pattern. You would have been out right over here on this day. The low 46.72. Okay, again, I'm a believer in selling some on the way up, and then if you like, allow the market to stop you out of the rest. Pizza, same thing. Stock is near the low, down 1, 2, 3 days in a row. It would have failed here. Okay, it would have worked here. 1, 2, 3. Here it breaks the pattern. 1, 2. Long 40.37, down 3 days in a row, up today. And then here you long at 40.37. The stop would have been the low of the day, 38.92. The next day that stop goes up to 39.34. The next day the stop goes to 40.24. The next day the stop goes to 41.45. The next day the stop goes to 42.41. And the following day the stop goes to 42.49. You would have been stopped out right over here. On day 1, 2, 3, 4, 5, 6, on the 7th day, you would have been stopped out. Okay. Now let's take a look at this at the best performing stocks over the last month. We have roughly 103 names, and out of those 103 names, we have 64 names, which is 62% of the names show this pattern within the last 25 days. Let me just make sure. Within the last 21 days, 62% of these stocks had this pattern. Now, what we want to see is, we want to see if the pattern, if that's when the move started. So here, National General Holdings Corporation, whatever it is, down 1, 2, 3, 4. Here's where the move started. Okay? This is in the last 21 days. VYGR, the move is start right here. This one did not work out, but as you can see here, this is where it showed up. AXNX showed here. This one did not work out, and it showed here these two times, right over here actually. Once, this is a buyout, it doesn't count. Wave Life, right over here, right over here. So these two times. So here, this is exactly when it showed up, which is on this day here, this little cone right over here. When it showed up, this is when the move started. You had a 1, 2, 3, 4, 5 day move. Okay. Now you can see the stock it's down by the low underneath the 200-day moving average. I don't think it matters that it's underneath the averages. Okay. It started here, the same exact thing. You had a nice move for roughly about 6 days. AIRG, here's where it was flagged. This one did not work out too well. Move started just, whatever, for a few days. TTD, it was flagged right over here. Again, this is the one that, this flattish move, these don't work out so well. You want this type of move, okay? This is the type of move you want, with the stock actually went down percentage wise and point wise, not just went flat. Even though this might work out, but this is more like a breakout play. TPB, this is where it happened right over here. And again, the importance here is that we want to see if the move is starting. A multi-day move is starting after, after the stock is down 3 days in a row and up today. And as we can see here, it did. Okay, this is what you want. You want to buy this high right over here, and you want to raise your stop accordingly. It worked out here a little bit as well, near the lows, and it got you some nice points. BOLD, this is where it showed up right over here. This stock did not move that. I mean, it started slow, but it kept you in the stock until probably right over here. Cure, here's where it showed up, down 3 days in a row, up today. Kept you in the stock for a couple of days. TNET showed up right over here. This would have been a cheat day. Again, when you have this situation here, you still have a pattern of lower highs and lower lows. So if you're buying the green candle, you're actually cheating. So you don't want to go full size here. You want this pattern to break somehow. You want a lower high, and then you want to break up the previous day high. That's when it breaks the pattern of lower highs and lower lows. COTY, it showed up right over here. Again, we're looking for when it's down like this. See this over here? Down like that, multiple days in a row, down percentage wise. NSTG showed up right over here, and also right over here. The most powerful ones is when they're down like this and the market is down multiple days in a row. These are the most powerful ones. CDNA, it showed up right over here. This one did not work out. But as you can see here, it's down 1, 2, 3. It's got an up day, but you still have a pattern of lower highs and lower lows. This is the reason why you don't go full size until they break the actual pattern. W, this is not a buy. This is earnings, so it doesn't count. UPLD right over here, again, earnings. OPRN, liquid. LNTH right over here. Okay, kept you in the stock for a while. Right over here a little bit. Again, we want, see the stock is down from 24 to roughly 22.48. It's not a lot. You want a nice pullback. Rare, no. This one, when did it show up? It showed up right over here. This is almost a stop out, okay, because it broke the previous day high, which is right over here. Your stop would have been 25.82. Then the stop would have been raised to 26.05, so you're still in the trade just by a little bit. IQ, again, this is more, sideways down 3 days in a row, so you want something that's going to pull back like this. Okay, even though it didn't work out here, you want an actual pullback where the stock actually went down percentage wise and point wise. This one showed up right over here. Okay, this is okay. Right over here, this one's okay. So that's basically it. So you're looking for stocks that are down 3 days in a row or more. You're waiting for the up day. Okay, you want that pattern to break. How do you break the pattern? If you have lower highs and lower lows, now you need a higher low and a higher high. Okay, sometimes you're going to get a pattern where we might be down 3 days, 4 days, 5 days. You might get an inside day. Okay, so you broke one half of the pattern, which now you get a higher low. But you still, for confirmation, you still want to wait for the higher high to break as well. And if you look at the best performing stocks over the last month or so, or whatever, 2 months, a lot of them are going to have this pattern. We just looked at the stocks up 25% or more in the last 21 days, and 62% had the same pattern. This is something that you're going to see over and over and over again. Now, it works best when the market is down multiple days in a row, and it works best when the stock is actually down, percentage-wise or point-wise, instead of having the stock down a few days in a row and just flattish action. Here, Egan, 1, 2, 3 days in a row. Here's a cheat day, okay? This could be somewhat of a cheat day, but the actual pattern will break once it goes through this high, which is roughly 1175. Okay, Let's just show you a few more. Here, UBNT, down multiple days in a row. Here's the up day. You would have been long here going through 95.44 in this candle, and it would have kept you all the way into this day. All right, so I hope this helps. If you have any questions, leave it on the stream, and trade them well and be well.